Welcome to Markets Now. I'm Michelle Rook along with Darin Newsom, Senior Market Analyst with Barchart, and we're mixed as we roll through the midday here in the markets. Cattle back to the plus side, hogs have fallen back, and over in the grains, corn and wheat to the plus side, soybeans are down, and soybeans are to the plus side. And Darin, let's just talk first of all about the grain trade, because I know you hate talking about the fact that we're going into a WASD, but obviously there is a little position squaring ahead of that going on here, it looks like.
Yeah, probably very little position scoring because this report's just absolutely not going to tell us anything new. I mean, everyone likes to talk how it's the first look at the 2023 crop. Well, it's the first look at the 2023 crop. We've already seen the outlook, the USDA's outlook. We've already had prospective plantings. These numbers aren't going to change. They're going to use the same acreage numbers. They're going to use the same trend line yields, and they're all just guesses anyway. But that's what's going to be penciled in. What we really need to know is what we can't know, and that's the unknown variables of demand. We don't even know what demand this marketing year is going to turn out to be. So, there may be a little bit of positioning, but I think it goes bigger than that. I think we've seen a lot of non-commercial activity this week. It started off very similar to what we saw last week, where we kind of tanked things early on Wednesday and then tried to bring them back. And we saw a lot of commercial buying coming into the market on Wednesday. We saw some of that yesterday, and then today it's just very quiet. There's not a lot of follow through in corn, certainly not wheat. But as you mentioned, soybeans are able to go higher. So is there going to be a reaction tomorrow? Yeah, we know that. Is it important? No, it's not. It really isn't. We've seen these numbers before.
Yeah. So we did have weekly exports out this morning, and those were certainly very disappointing. And our shipments have been running behind pace, at least in corn and wheat, haven't they?
Yeah, and we're just not gaining any ground. I mean, corn shipments, so far through the marketing year, still running something like 33% behind last year's shipments, for the same point. So it's just we're just not getting anywhere. Wheat shipments starting to slow down as well. We're coming to the end of the marketing year. I think we've got 4 or 5 reporting weeks left before the end of May, and then all of a sudden we're off into the next new crop. So we're just going to come up short on both of those. No huge surprise. The markets are kind of showing us that number one, in wheat, there's just no demand. Number two, we don't have any supplies of corn. So that's why we're running slow on exports. We just don't have anything to export.
Okay, so I was going to ask you if it was a function of that, or how low did prices or would prices have to get here to start stimulating demand?
I think what's going to happen is we're going to have to get to the next harvest, and that's probably going to be in the July-August timeframe, and we start to refill some of our, we start to rebuild our supplies a bit. If we've been watching the available stocks to use monthly by looking at cash prices, we know that it's been tight for much of 2000, for the last 2 to 3 years. But now, again, given what we already know about the 2023 crop, there's going to be more acres. D's corn, did what it needed to do against November beans from last September through February to buy acres away. La Nina supposedly came to an end, being replaced by El Nino, so the weather's supposed to be better. So we know we should have more bushels of corn to rebuild supplies this year. And so that's where the real test is going to be. Are we going to see any export demand, or was Brazil's crop big enough that some of the world's largest buyers just aren't going to come back to our door right now?
Yeah. And right now we are seeing today, in terms of technical action in the corn anyways, we took out the lows here from March and the December contract. So where do you think where are you projecting us to?
Yeah, that's what's interesting to me. If I'm an investor and I'm looking at long-term trends, and I see that the D's 23 contract has gone, is extended the market's long-term sell-off, just using D's contracts only, I'm going to sit back and wait. I'm not going to jump in and buy right now. I'm not going to cover all the short positions that I've got in place. And it's round number. It's round number reliance. We've gone through 520. We're getting close to 510. If we break that, then there's a big round number of $5. I think on the chart itself, there's there's a technical target down around in the 490 area. That may be a bit, maybe a long ways away right now, given what we know, but given what the market looks like. But if supply and demand does change, if it's not as bullish, if spreads start to build some carry, then certainly we could open the door and go to that next level down.
Okay. So do I dare even ask you if we're seeing any pressure today, or corn is, because the talks on the Black Sea grain deal look like maybe we're going to extend this thing or not?
Uh, you know my opinion well,
I know,
Michelle.
that's why I'm throwing a bone at you here.
I don't think it makes any difference whatsoever. Number one, Russia's going to change its mind, 5 or 6 times again. Number two, I just don't think there's any grain to ship out of the Black Sea ports. Russia's already stolen everything of value, and they've shipped it out already. So, I just don't see it as a huge. I just don't see it as a huge draw right now, a huge factor in the market. Some will argue that it is. I just don't see it that way.
Gotcha. So soybeans have come back here. We made some new lows for the move, and then we came back, and it looks like meal may be the driver there. Is that because of the lower Argentina figure again? I see we're down to 21.5 million metric tons, only to be offset by a bigger number in Brazil by CONAB. But what are we trading there, Darin?
Yeah, to me, I think we're still dealing with that lower that lower Argentine crop. We've seen a little bit of an uptick. We saw it again this morning. A little bit of an uptick in U.S. exports of soybean meal. I think we're going to see more crush here domestically. But the problem is that's not going to be for the meal. It's going to be for the oil. So while we could be exporting some more meal, crushing for some soybean meal exports, if we start crushing more domestically for oil, that's going to create more bean oil. So I think it's going to be a wash. So again, it's going to be interesting to watch play out short term. Certainly looks like it's going to be tied to that smaller Argentine crop.
Gotcha. So let's talk about outside markets. You've got crude oil down this morning. The Dow is losing some steam here in negative territory. What are we trading here? We had PPI numbers out this morning. Those were a little better than expected. CPI was nothing that we didn't really expect. So is the market already looking ahead thinking maybe we're going to see more interest rate hikes or what?
No, I don't think so. I think, if we look at the Fed fund futures forward curve, that's always fun to say. We can still see that the market's looking at a possible, flattening out, if not even a decrease of interest rates in July. So I don't think there's a huge, there's a general consensus that we're going to see, any more interest rate increases, at least not for now. This is where it gets kind of humorous watching, financial television. One day, markets rally because of this. The next day they sell off, and it's for the very same reason. Again, they're making up reasons why. Markets just bounce back and forth. I think there is a bit of nervousness. We certainly saw UK raise its interest rates this morning. So I mean, there's still global inflation. We know that. That's not a surprise. And countries around the world, governments around the world are dealing with it. They've all pretty much played from the same playbook. So now we'll see what happens. But as far as day-to-day movements, I'm just not get overly excited. So the stock markets were up, 1 to 2% on Wednesday, and now they're down 1 to 2% on Thursday. That's just kind of normal behavior anymore.
Gotcha. It has been impacting the cattle market to some degree, although I will say today we're kind of shaking off the outside markets in the cattle, and the cattle market seems to shake off a lot of bullish or bearish news. It's pretty resilient, isn't it?
It really is. Newsom's market rule number 4A: a market that can't go down won't go down. And we can throw just about anything we want to at this cattle market. And it might break for a day or two, and it might look toppy on the short term and intermediate term charts, but it just can't break. I mean, you just can't find anyone willing to sell it and hold it for much more than a day or two, maybe a week at most. So, I mean, this market's just strong. It continues to find some buying. Cash market, yeah, maybe a little softer here earlier this week. We'll see what develops here today and tomorrow.
Mhm.
But even if the cash market backs off a little bit, I just don't think we're going to see the futures fall that hard.
Yeah, we had 170 cash trade in the South yesterday that broke the board for a little while, but certainly it is coming back. So is Newsom's market rule 4B that markets that can't go up won't go up like hogs or what?
It absolutely is,
I
Michelle,
bet.
and that is the perfect example. I mean, we could say that the U.S. is completely out of hogs, and I still think they'd close lower for the day. It's just ridiculous situation right now because the same arguments that folks used to be bullish cattle are alive and well in hogs, and they go lower almost every day. So it is just one of those things. We just can't find the buying to push hogs higher right now. Someday we will. We've seen this before. It's just going to take some time.
I would like to say this morning the news that the Supreme Court is upholding Prop 12 in California might have a little bit of a headline negative influence on the market. But as you just pointed out, hogs are just hogs. And so I'm not even sure that's it. But
Right. Yeah, I would agree with that.
Okay. Thanks for joining us. Always fun. Darin Newsom, Senior Market Analyst with Barchart, and that is Markets Now.